Next, we have some important news from the IMF that could have major implications for us in the crypto space. So, the IMF's second-in-command, Geeta Gopinath, is urging the U.S. to tackle its growing fiscal deficit. She says the U.S. has the economic strength to cut spending and raise taxes. Why should we care? Well, the fiscal health of the U.S. can significantly impact global markets, including crypto. Here are the key points. The U.S. debt is projected to hit record highs by 2029. High debt levels can lead to economic instability, which might push investors towards alternative assets like crypto. Gopinath is pushing for reforms in pensions and medical spending, which are crucial due to the aging population. These reforms could impact government spending and economic policies, indirectly affecting the crypto market. 2025 is shaping up to be a critical year, with potential changes in tax policies depending on whether Trump or... Hello there, folks! Today, let's take a look at the latest Bitcoin prices. As of today, Bitcoin is valued at $67,180, which is a notable decrease from yesterday's lowest price of $69,500. This decline highlights the inherent volatility of the crypto market. Now let's delve into future trends and predictions. Historically, Bitcoin has shown a pattern of sharp corrections followed by significant rebounds. For instance, in 2017, Bitcoin experienced multiple corrections before hitting its then all-time high in December. Similarly, in 2021, Bitcoin saw several dips amid regulatory news and market sentiment, but continued to recover and reach new highs. The long-term outlook for Bitcoin remains bullish. Increasing institutional adoption, growing mainstream acceptance, and Bitcoin's limited supply underpin its potential for sustained growth. Additionally, the expanding integration of blockchain technology across various sectors indicates a broader utility and acceptance of cryptocurrencies. In summary, while short-term volatility is a given, the overall trend for Bitcoin appears optimistic. Stay informed, stay updated, and make sure to join us till the end of this video to keep up with the latest insights and trends in the crypto world. Let's break down this fascinating piece about inflation and its potential impact on the crypto market. Now, I know what you're thinking. What does inflation have to do with crypto? Well, bear with me, because there's more connection here than meets the eye. First off, the forecasted tame inflation for May is a good sign for the overall economy. When prices aren't skyrocketing, it means consumers have more purchasing power, which can translate to increased spending and investment across the board. And you know what that means for crypto? More liquidity, and potentially more interest in alternative investments like digital assets. Now, the drop in gasoline prices might not seem directly related to crypto, but think about it this way. When people have a little extra cash in their pockets from saving on gas, they might be more inclined to explore other investment opportunities, including cryptocurrencies. But here's where it gets really interesting. The potential for the Federal Reserve to consider interest rate cuts later in the year. Now, why does that matter for crypto? Well, traditionally, lower interest rates can lead to decreased yields on traditional investments like bonds and savings accounts. And when those returns start to look less appealing, investors often turn to higher risk, higher reward assets like crypto in search of better returns. So, what's the takeaway here? Well, a stable economic environment with controlled inflation and potential interest rate cuts could create a favorable landscape for crypto investing. It's all about understanding the broader market dynamics and how they can influence investor behavior in the crypto space. Keep an eye on those inflation reports, folks, because they just might hold the key to unlocking new opportunities in the crypto market. Let's dive into this exciting news from DeFi Technologies, Inc., about their adoption of Bitcoin as their primary Treasury reserve asset. Now, this move speaks volumes about the growing recognition of Bitcoin's value beyond just being a digital currency. First off, choosing Bitcoin as their main reserve asset is a bold move, but it's not surprising given Bitcoin's proven track record as a hedge against inflation and currency debasement. In today's economic climate, where traditional assets can feel shaky, having Bitcoin in your financial arsenal can provide some much-needed stability. What's really interesting is DeFi technology's emphasis on Bitcoin's digital framework over traditional assets. This highlights a shift in mindset towards the future of finance, where digital assets like Bitcoin are seen as not just alternatives, but potentially superior options for preserving value and hedging against risks. And let's not forget about Bitcoin's performance. Being recognized as the best-performing asset of the decade is no small feat. It's a testament to Bitcoin's resilience and potential for long-term growth, which makes it an attractive choice for companies like DeFi Technologies looking to bolster their Treasury reserves. Lastly, seeing how DeFi Technologies funded their Bitcoin purchases through revenue generated from their trading desk is a smart move. It shows they're not just jumping on the Bitcoin bandwagon blindly, but making strategic decisions based on their financial performance and market insights. Overall, this move by DeFi Technologies signals a growing confidence in Bitcoin's role in the financial landscape and underscores the importance of digital assets in today's economy. It's a reminder to investors everywhere to keep an eye on the evolving crypto market and the opportunities it presents. Pack the recent clash between Elon Musk and Apple over their partnership with OpenAI. Now, when heavyweights like Musk and Apple butt heads, it's bound to make waves in the tech world, especially when it involves AI and privacy concerns. First off, Musk's threat to ban Apple devices from Tesla and SpaceX premises is a bold move, but it's not just about company policies. It's about standing up for user privacy and security in the face of increasing AI integration. And let's face it, in the crypto world, where decentralization and privacy are key, Musk's stance resonates with many of us. His concerns about Apple's collaboration with OpenAI and the potential security risks are valid. We've seen how data breaches and privacy issues can shake up the tech landscape, and Musk is right to be cautious. But here's where it gets interesting. Musk's own involvement in AI with OpenAI and his recent actions with xAI show that he's not just talking the talk, he's walking the walk. He's putting his money where his mouth is, investing in alternatives that prioritize privacy and security. So, what's the takeaway for us crypto investors? Well, it's a reminder of the importance of privacy and security in our digital age. As we navigate the crypto landscape, we should keep a close eye on how companies handle our data and prioritize platforms that respect our privacy rights. Overall, this clash between Musk, Apple, and OpenAI highlights the ongoing tension between innovation and privacy concerns in the tech world. And for us crypto enthusiasts, it's a reminder to stay vigilant and advocate for platforms that align with our values of decentralization and privacy. If you enjoyed this video, don't forget to leave a like and subscribe. Your support means the world to me and keeps me motivated to bring you the hottest news updates every day. So, let's talk about this interesting piece discussing the recent performance of the Bitcoin Smart ETF. Now, what caught my attention here is that shift in financial flows from positive to negative after 19 straight days of positive net inflows. That's quite the turnaround, isn't it? Here's the thing. A change in financial flows like this can be a significant indicator of shifting investor sentiment. It's like the market's way of whispering, "Hey, heads up, something's happening." Now, sure, seeing that negative number might raise a few eyebrows, but let's keep it in perspective. 71 million in negative outflows might sound like a lot, but compared to the consistent 100 million positive inflows we've been seeing, it's not exactly earth-shattering. Now, what's really intriguing is the potential impact on market dynamics and investor behavior. This kind of shift can create ripples in the market pond, but whether it turns into a tidal wave or just a gentle ripple remains to be seen. And let's not forget about the players involved, like Grayscale, throwing their hat into the ring. Their move might not be game-changing, but it's worth noting nonetheless. Overall, this paper brings up some fascinating points about the ebb and flow of financial currents in the crypto world. It's a reminder that in this fast-paced environment, even the smallest ripples can make waves. So keep your eyes peeled, folks, because who knows what the next tide might bring in. Last but not least, we have some serious move from the Solana Foundation delegation program. Let's talk about the recent developments in the Solana ecosystem regarding validators facing penalties for alleged involvement in economic attacks. Now, this is a hot topic in the crypto world because it touches on the fundamental issue of security and trust within blockchain networks. First off, the fact that over 30 validators were removed from the Solana Foundation delegation program is a significant move. It shows that the Solana community is taking a strong stance against any behavior that compromises the integrity of the network. Now, the nature of these attacks, particularly the sandwich attacks, is concerning. These tactics exploit vulnerabilities in blockchain networks and can have serious consequences for traders. It's a reminder of the importance of robust security measures in decentralized systems. What's interesting is the role of infrastructure operators like Node offering profit-sharing arrangements with validators for running private mempools. This highlights the financial incentives at play and the need for vigilance against potential conflicts of interest. Overall, this situation underscores the ongoing challenges faced by blockchain networks in maintaining security and trust. As investors, it's crucial to stay informed about such developments and consider the measures taken by projects to safeguard against economic attacks. It's all about building a resilient and trustworthy ecosystem for the long term.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.